employment unexpectedly fell in June, with the second decline in 3 months led by the biggest drop in part-time work in almost 2 years. But how will this affect the CAD? Colin Jasinski joins me down the line to discuss. Now, Colin, CAD-wise, we already have had a big move down lately. Do you think this is going to continue? How much more room do we have here?
It looks for the moment as though we're pretty much entering a trading range here where we need some consolidation. We had a strong move down for US dollar CAD in June, but in recent weeks it started to level off in the 106 to 107 range. This looks likely to continue in the near term, particularly in the wake of the jobs report, because instead of it had looked as though we were trending lower and ready for a breakdown, we've now reversed and gone to the upside.
104.65 is your midterm forecast. Now, we last seen these levels around October 2013, but what will be the main drivers this time round, do you think?
I think my feeling for the Canadian dollar is that as commodity prices continue to improve, we've seen strength in crude oil over the last few months, even though it's come off lately, but we're also seeing strength in gold, strength in copper, and strength in other metals. So that benefits resource currencies, including the Canadian dollar. We've certainly had strong moves to the upside lately in the Australian dollar and the New Zealand dollar, so there is room for CAD to play a bit of catch-up there. I don't think we'll see a huge move out of the Canadian dollar, but another decline down into the 104.60 to 105 range seems perfectly reasonable. 104.60 is a 50% retracement of the previous advance, so technically that does look like an area we could see it drawn to as we move later into the year.
The FOMC finally announced that soon the taper train will come to a halt. How is this, coupled with the Bank of Canada's own policy motivations, impact your outlook for the US dollar against the Canadian dollar this time next year, for example?
In the long term, I do think that the Canadian dollar is going to find itself capped, and the reason for that is that in the near term, with the U.S. Fed and moving up their end of tapering from December to October, and also looking at talking about more about how they plan to normalize monetary policy heading into next year, we'll likely start to see more comments on that in late 2014. This, over the longer term, should help to give the U.S. dollar a boost versus not only the Canadian dollar but also other major currencies. At the same time, we may see the Bank of Canada remain on hold for longer, particularly if the Canadian job market continues to sputter as it has for the last 6 months, and even through to today. We're likely to see that after several years where the Bank of Canada has been relatively more hawkish than the Fed, going forward we may actually see the Fed start to become more hawkish than the Bank of Canada, limiting the upside for the loonie in the longer term.
Colin, thank you so much for your time. Pleasure to speak with you. Well, viewers, we do have plenty of action from Canada still to come next week, so track the latest currency movements by clicking back to the website. Goodbye for now.